Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of SunRun Incorporated, ticker symbol RUN. And before I get into these levels that I have drawn on the chart, I first want to mention that at the close of the week, which is Friday, December 1st, we see the RSI at 70.31. So that's just getting into overbought territory. Also, we see volume, which has been green for the past 4 trading days. However, over the past 3, volume has been decreasing, even with this big over 11% move on December 1st. Volume has been decreasing. So that's suggesting to me that as we get into these levels right around 1459 or just below that, there aren't as many buyers. So that suggests to me there could be a pullback in the near future. And some of these levels I think will play a role in that, which I'll go over in just a second. And so, okay, the first level that I have marked here, the lowest level, is at $8.84, which is based on the lowest close in this time frame, which occurred on October 27th. And so ideally, we do not want to see any closes below that level. It's possible we'll see some wicks below, like on, October 25th, there was a low of $8.43. So as long as closes are above 884, as long as that level is maintained, I do think that there's more upside. However, if the price does pull back to that level, that's a notable pullback from over $14 right now. So good to be cautious of that. The next level that is to be considered is $9.59. A gap was formed between November 13th and 14th. So I do expect that will eventually be filled. However, it may not be filled in December, who knows? But eventually I do think that will be filled. So good to be cautious of that. Then moving up, there is another gap that's at $11.95. There's a blue line there, but it's kind of covered up by this white trend line that I have drawn, which has origins going back to 2016, which I will show in a minute. But so there is this gap that was just recently formed between November 28th and 29th. And so I do expect that to be filled sooner rather than later, especially because of this white trend line, that convergence of 2 key levels, not only the gap fill, but a level that has served as support and resistance in the past. I expect it to serve as support in the near future, but with this gap to the lower side, it may not hold up as support for very long. And then as mentioned, with this big 11% candle on the day of December 1st, it did not close above this level at $14.59, which I do feel is, not so great with the weekly close being below that level. I will take a step back and show where that yellow line originates from in a minute. But yeah, with that close below it, what I could see happening into next week is maybe a gap up, a wick of the candle touching $16 maybe, but then I do expect closes below $14.59, perhaps not initially in the week, but I do expect that, and I do expect a pullback to right around $12 at least. And then so some of these levels, let's see if I adjust the frame. The high on September 15th was $15.74. And I believe the, high on September 18th was right around $15, actually $15.09. So above this yellow line, I do see a range between $15 and $15.75 as perhaps acting as resistance. So perhaps there is a wick of a candle that goes up to 16, but a close below, the $15.50, which was the closing price on September 14th. All right, and then taking a step back to go over those lines there. First one that we can see is the orange line at $16. That's based on the low price on July 6th. Also, that served as resistance between August 30th and September 1st. So I do think that's going to be a key level, likely acting as resistance before support. And then before I get to the red and yellow lines, we can see this dashed blue line at $22.23. That, as far as I can tell, is the nearest gap to the upside. So that's a pretty considerable move to fill that. So I do expect there to be some gaps formed in this yellow, orange, and red region before filling the gaps at 11.95 and 9.59. So I do think that 22.23 is kind of a stretch for the time being. Okay, and then taking a step back to show the red and yellow lines, we can see, actually, before I zoom out too much, we can see a touch point here in the yellow at 14.59. The low on May 19th was $14.55. So, it served as support there. And it looks like that approximate level is serving as resistance now, with the week not being able to close above 14.59. I guess there is actually no touch point here, which was March 17th, had a low of 16.69, so not getting to the red level of 16.50. Zooming out, going back in time, sticking with the daily candles because that's how I drew these lines. We can see the red line originates from the low on June 11th, 2020, before this big move up. So there was this little drop here, this little gap that was formed before immediately being filled with this move up. 1650, also psychological, thinking in dollars, quarters. It's kind of a round number in that sense. And then this yellow line, let's see where that originates from. That originates from the low on August 15th, 2019, serving as support following that, then resistance, and resistance again here before that red line was touched, and this continuation upwards. And then, let's see, around this time frame, so this is March 17th, 2020, that is a low price of $7.84, which was also the low a few days later on March 23rd, 2020. So that is one pivot point for this white trend line. And as I had mentioned, the origin of that trend line was in 2016. So that is based on the low of November 9th, 2016, which later served as support between May and, in May 2017 in this region. Also, again, in September 2017, a break below in February 2018, which only lasted a couple days before, notable moves up before being retested again at this other pivot point. So, I'm just going to scroll back to the current time so we can see where that white line converges with this blue gap fill that needs to be done. I see that right around $12 as being a key level that needs to be retested. I suspect this will serve as support, but ultimately I do think it will break down because there is a gap to the downside at 9.59 that needs to be filled. However, with that being said, with this big green candle, with the close of 14.34 for the day for the week being only 3 cents lower than the high of the day, which was 14.37, I do think that these three levels, $14.59 up to $16 around there, and $16.50. I do think that those levels could be tested before these gap fills to the downside. However, I do think they will be rejected ultimately in the near term. So I would be prepared for some downside and I wouldn't be too greedy. Let's just put it that way. And so if you did find this helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thank you so much for watching, and happy trading.